On today's show, we're talking about the costs imposed on credit unions because of fraud, the urgent push towards instant payments, and the sharp rise in cybercrime. Welcome to Grow Your Credit Union, the podcast where credit union leaders gather, learn, and grow. I am your host, Joshua Barkley, and as always, I am with my co-host, the legend of Texas, Becky Reed. Becky, hello.
Howdy, y'all.
Let's kick things off today. We have the former financial crimes program manager of Safe Federal Credit Union and fraud operations leader at Mission Omega, Haley Wyndham. Haley, welcome to the show.
Thank you so much. I'm so glad to be here.
The 2024 State of Fraud Benchmark Report published by Alloy shows that 79% of leaders at credit unions and community banks reported over $500,000 in fraud losses last year. Adding to the concern, Security Magazine noted that credit union fraud rates shot up by over 70% in 2022. It seems like fraud is charging full steam ahead at credit unions. Haley, what is driving the massive increase in fraud that credit unions are experiencing?
Well, I'll have to say it's several factors, right? We've got card fraud, which is massive in itself. You've got card present, card not present. We had the big EMV liability shift that happened several years ago. So we all switched to chip cards, and we're still trying to balance where to stop the fraud and implement rules there, but where we won't necessarily impact good members. So there's that balance struggle there. Then we've got identity theft and synthetic ID fraud, and that's pretty much the hidden fraud. Most credit unions don't realize how big of a problem this is because they're viewing these loan losses as just regular loan defaults because they don't understand that this wasn't an actual person that applied. This was a synthetic ID, which is a combination of multiple identities. Then we've got these massive rates of just phishing and smishing scams where fraudsters are deceiving members by impersonating the credit unions. These are through emails and texts. And what they're doing is they're essentially tricking the members into disclosing their private information and their credentials, having them log in through these mirrored sites that look like the credit union websites, and they're able to keylog and mirror the information that's being typed in by the member, and they're saving these credentials, and they're able to essentially have account takeover, then money's transferred out, and it's just this huge issue that just continues to keep growing. These fraudsters are getting better at what they do. They're becoming more sophisticated, and they continuously invest in themselves in learning how to get better at fraud.
Becky, what's your take on this?
Well, I believe that the existing paradigm, which is a Web 2 paradigm, has reached its pinnacle. Fraud has forced it to reach its pinnacle. There is really no end in sight for the fraudsters, and Haley is right. These folks use the money that they steal or get fraudulently in order to invest in technology, invest in becoming better at being criminals so that they can make more money. And so I believe that fraud and rampant fraud is the impetus for a Web3 paradigm shift. In a Web3 paradigm shift, the consumer is the owner of all their data, not a centralized database that can get hacked. And so I believe that we have reached the precipice of where Web 2 can take us. So I think the future is quite different, and that's the only way we're going to combat fraud.
ACI Worldwide's Prime Time for Real-Time study reveals a significant surge in real-time transaction volumes globally. Predictions indicate that real-time payments will make up 27.8% of all electronic transactions worldwide by 2027. Given the trends, credit unions need to prepare for the rapidly growing demand of real-time payments. Haley, if credit unions want to satisfy the growing demand for real-time payments, what resources should they be investing in?
Infrastructure modernization. Let's give a round of applause for Becky Reed's book. Okay. We've got to do a better job of just aligning our performance, the reliability, scalability, and even cost effectiveness for the way that we operate within these organizations. We've got to be able to adapt to the changing needs of the world, the digital world, as we continue to grow. We've got to shift from a transaction-centric prevention model to identity-centric. There's a wonderful book I read recently that talks about self-sovereign digital identity. Talk about mind-blowing. Whenever you can say truly, here's my identity, it's mine. There's no one that can manipulate this or change this. And you can trust that that I am who I say I am. That's a real world we need to get to sooner rather than later. Too much the fraud is happening at onboarding. We've got to get in front of it. We've got to get to real-time fraud detection and prevention. We're still, again, just working in these batch processing worlds, these analog worlds that we've got to get out of. We've got to move to real time, meaning we've got to understand how everything flows, how it works, and truly where the credit union or where these financial institutions actually fit in the payments world, and how we can help to basically strengthen the economy by providing these services. Credit unions were founded on people helping people, giving them the financial services that they don't have access to. But whenever we are just piecemealing, it's not going to work.
Becky, what's your take on the real-time payments situation within credit unions? We see a growing demand, but do you think credit unions are ready to take on this demand? And can you explain to me why I really need real-time payments?
All right. So I'm going to talk a little bit about a consumer expectation, and then I'm going to talk a little bit about what really happens behind the scenes. So a consumer expectation is, Joshua, I owe you some money for dinner, right? You and I went and had some pizza and beer last night, and we decided to go Dutch. You just happened to pull your debit card out quicker than me. And so now I owe you $25 for beer and pizza. And so I'm going to send that to you through Zelle or Venmo or Cash App or some other type of app. And you probably will see that in your account rather quickly. Now, let's talk about in a cryptocurrency world where I'm going to use a stable coin. All I have to do is have stable coin in my digital wallet, and I can give you $25 of stable coin, and you will have it in seconds. Seconds. And it doesn't matter if you have a bank account. Now, I just gave you stablecoin. Now, the crux of the issue today is who's going to accept that stablecoin as payment. Well, that is definitely coming. But most people, consumers, feel like the Venmo or the Zelle experience is actually real time. But it's not really real time because it's just happening ACH most of the time behind the scenes, which takes a few days. And it's batch. So now I'm going to talk a little bit about what actually happens at the credit union, and what Haley referred to is legacy systems that are doing things with batch processing. A lot of financial institutions, and especially credit unions, have not adopted the real-time payment methodology, which is utilizing an ISO 20022 infrastructure in order to process real-time payments. So an RTP transaction through the clearinghouse or through FedNow really, truly does hit your account in real time, just like the stablecoin that I just mentioned. But most credit unions are not using those today. But let's talk about why people need real-time payments, and it's businesses. So if I, as a business, can wait till the very last second to pay you, Joshua, now I get to reap the benefits of having that money in my account for as long as possible. You, as a vendor who I owe money to, wants to get that payment on time and doesn't want to have to wait 2 or 3 days when it's due the 15th and post in my account on the 17th, because you want to be able to use that money right away too, right? So the future is real-time payments. It is not going away, but to Haley's point, the existing mechanisms by which we use to combat fraud are not inherently real-time. So again, I'm going to talk about The paradigm shift to Web3 is coming, and that's the only way we're going to be able to deal with fraud.
ChiefMartech.com claims that the average tech stack of a company is composed of 291 applications. Oof. Considering these trends, Haley, it's truly astonishing to think about how credit unions can keep track of everything that's happening within their digital networks. So here's my question. Do credit unions truly understand how money moves through their extensive digital networks? Haley.
No. Credit unions are falling behind as it relates to innovation. It's everything that we just talked about. It's getting out of that analog world. While operating in an analog world, they are trying to compete in an industry that their systems just cannot support. I mentioned earlier trying to piecemeal everything. That's saying, hey, we need to offer online banking because another credit union does. Okay, so let's go out and let's find the best possible solution for online banking. And before they even look to determine if their core can support the functionality that online banking was actually designed to do. And so we go in and we get the very best thing. But then when we realize, oh, wait, it doesn't work, we've got to create all these different coding mechanisms to make it actually work. And really, it's not working, again, the way that it was designed to. You've still got these in-between moments, these batch processings where it's truly even an issue to get logged in to connect to your account. When you've got an online banking system that does not show your members' checks, images, you're not connected. That's an issue. That's not truly providing the online banking service that you're claiming you can provide. We don't need to just see the transaction details as in a one sentence, what you see on your statement. We should be able to click into that ACH and see the transaction number, who sent it, whose name was it assigned to, and what was the ID number that went with that code. We've got to be able to provide transparency into the financial services that we're offering to our members, and we don't currently do that. Credit unions need to take that step back, stop trying to offer the next best thing, look within, fix your systems that you currently have. If you've got something that's outdated, don't try to just fix it. You need to move on and find something that's better, a better service, because ultimately you're not doing your members a service.
Becky, what's your take?
So with Pure IT, I have gone into a bunch of different credit unions, and they have gone into even more to take a look at their technology stack. And what we have found, and this will not surprise Haley at all, that most credit unions have more than 100 technology solutions. And that's just an average size credit union. When you're in the multi-billion-dollar credit union range, sometimes that can be 200 or 300. And what we find at Pure IT when we come into a technology assessment is some departments are using different software to do the same thing, but they don't know that the other one is even using that software to do that. Or like Haley said, a member complains, or there's some sort of marketing initiative, or there's a technology initiative or a lending initiative or whatever. And that particular department in a silo goes out and finds software to deal with that particular issue. But the holistic approach is not taken to see how that integrates with all of the systems that currently exist. Maybe something needs to go away. Maybe you don't even need that because you have something that already does it. And so that's why it's so important for a credit union to have a technology roadmap, something that they implement into their strategic plan that provides them a roadmap and a vision for what things are going to look like in the future. No credit union can afford to rip out everything and replace it today. But we do know that we need to start replacing these legacy systems. Did you know that a core processing system in the credit union, the most popular ones, are more than 40 years old? They were not designed to integrate in a seamless way with the API connectivity and the technology that is available today that many of these digital banking providers are using. So having that technology roadmap and implementing it just like you do your traditional strategic plan is paramount.
And I want to add too that we need to start incorporating fraud at the forefront. Becky mentioned having that holistic approach. I just want to give lending as an example. If you want to offer the next best option for lending, you go out and you find it, you get it approved through executive management. They're like, yes, this is going to be a great product for our members. You go through this whole entire process, but right before you go to implement, you then include risk, compliance, and fraud. And you make those three the bad guy when if you'd have brought them on at the beginning, they could have, number one, helped you negotiate your contract with the vendor, had more accountability pushed back on the vendor to ensure that the product or service that they were offering was actually going to work. Because if you give them that pushback, if they don't want to accept the liability for something, then you know that they don't trust their product themselves. So we wait until the very end to bring in these different departments that truly are your partner. We often want to put risk, compliance, and fraud in their own little buckets and say, oh, they're the black sheep, don't even talk to them because they don't want anything to work. No, we want it to work. We want it to work properly. We want it to actually flow and have a real world understanding of this is how it flows. This is the impact. This is our risk. This is the potential exposure that we have. And this is how we combat that. So really being able to say, yes, it's okay that we move forward, but we got to make sure that we have the right people at the beginning of those conversations.
According to estimates from Statista's Market Insights, the global cost of cybercrime is expected to surge in the next 4 years, rising from over $9 trillion in 2024 to $14 trillion by 2028. As cybercrime surges, credit unions obviously need to address the challenge in new and innovative ways. Haley, could you let our listeners know the key actions? Like if you were thinking about these are the most important key actions credit unions can take to reduce fraud, tell us what those would be.
First and foremost, one of my favorite activities is a fraud risk assessment. It's being able to determine how vulnerable is your institution to fraud. Are there any gaps in your processes, leaving opportunities for fraudsters to exploit? A fraud fighter's worst nightmare is fraud happening when and where you least expected it to happen. So imagine being able to effectively prioritize your institution's strategy based on highest risk. A risk assessment won't solve your problems, but it provides insights into the problems you knew you had, the ones you didn't know you have, which ones, if any, need your immediate attention, and how you can address them. I also like the accountability that risk assessments put back on the vendors. You know, I mentioned that a minute ago. If a vendor told you their solution would solve problem X and it hasn't, then you know it's time to have a conversation and probably a demo or two with other providers. So risk assessment, first and foremost, fraud risk assessment. Invest in your fraud teams. Begin the shift now to embrace a fraud savvy culture. Have them participate in industry events. Credit unions have this distinct, unique aspect, which is collaboration. They love to share. It's one of the main reasons I fell in love with credit unions. And if we can start sharing, opening up about what you're seeing, how you're combating it, and then have these forums or roundtables or even just close state events. We have a South Carolina credit union quarterly roundtable where we all come and we talk, and guess what? We have the same fraudsters attacking us, doing the same exact thing. And when we talk about it and we say, hey, this is how we stopped it or how we plugged the hole or at least put a Band-Aid on it. Here's how another institution actually stopped it. Here's how one institution prevented it. So really being able to embrace that collaborative culture of credit unions, but having it where you've invested in your internal fraud teams so that they can then feel empowered and see the value that their work actually brings. We've got to start understanding the value that these fraud teams bring and stop looking at them as the black sheep. And then finally, educate your members. This month is Financial Literacy Month. Add a section about scams and financial protection and security. Don't habit where we just focus on loan rates and what other products and services you offer. Instead, be that leader and that trusted financial provider to your members that says, hey, fraud happens, and this is how you can protect yourself, and this is how we're protecting you as well.
Becky, how should credit unions be thinking about fighting fraud?
Well, it's only going to get worse. And as I mentioned before, there is a solution out there on the horizon, and it's called Web3. But I want to talk a little bit about what Haley said about credit unions. Credit unions exist to serve the specific needs of its member owners. That is a very important thing to remember when you are looking at what you are providing to your membership. It's very easy as a credit union employee to get caught up in something that's fun or new or cool or whatever the case may be. But protecting our members is something that is very important, and doing it in a fiduciary responsible way that maintains the health and stability of the credit union. When I worked at Lone Star Credit Union, we did a study, and this actually is something that can fit nationwide into any credit union. But what we found was 25% of credit unions' annual operating costs are in payments and fraud every single year. That's what we paid for payment services, which include ACH, debit and credit, wires, every other type of payment. It could be real-time payments, ATM networks, all of that, plus the fraud that's associated with all of that. And this is taking into consideration not just how much we pay vendors, but also employee time, processes, systems, technology, all of those things, 25%. Now, you cannot tell me that an organization that is focused on its members, that is spending 25% of its annual asset size in these types of issues, and we're not looking at fixing it. But it's our duty to fix it because we are there to provide service to the members. And if the financial institution doesn't exist that the members own, then the members lose their financial institution. So we have to start focusing on these things. And I'm going to beat that drum again. We need to start looking at emerging technology in order to solve these problems. My book, and Haley mentioned it, so I'll give a plug. It's called Credit Unions and DeFi, A Financial Renaissance. You can find it on Amazon. It's available on Audible. It's available on Kindle and in paperback. That is the future, and that is how we can save money, we can save time, and protect consumers.
That brings us to a close. Haley, do you have any plugs or final thoughts for our listeners?
If you're a fraud fighter and you're listening, you're not alone. Keep going, keep trucking. Change is coming. If you are a C-level executive, listen up. You've got to start investing in these fraud teams, these fraud programs. It's so important, and it's for your members. We want to offer so many things, but we don't want to put our members in debt. We also don't want our members falling for scams. For every dollar lost to fraud, it costs your institution $4. Think about that. That's an operating, that's an expense, just like Becky was just talking about. We've got to do a better job. Pay more attention to your fraud people. If you are a C-level executive and you're listening now, pull a fraud fighter into your office and ask them what keeps them up at night. You will be mind blown of what exactly is going on in the institution that you probably don't even know about because that hasn't made it in a memo up to you yet. But these are big problems that need to be addressed. The other thing I'll say is that I try to put out a lot of content. I recognize credit unions on my LinkedIn page every Friday. I do a See You Fight Fraud. That's a pun, see you. I want to see you fight fraud, but it's for credit union, okay? So I do a Friday post every Friday that just recognizes credit unions that are doing a phenomenal job of marketing fraud and scam awareness. So make sure you check those out because marketing teams, it's okay to market fraud prevention. It's not going to associate your brand with fraud. It's actually going to show that you are a trusted financial provider. And I have a CU Fight Fraud dashboard as well that's available on my LinkedIn, but I can provide it to you guys too to give to the show notes, that really gives fraud fighters a dashboard of where to go and where to look if you've got an issue with fraud. It just kind of houses everything all together. So I'd love to be able to provide that to them as well.
Thanks, Haley. Thanks, Becky. And a special thanks to you, our listeners, for supporting the show. This has been another episode of Grow Your Credit Union, the podcast where credit union leaders gather, learn, and grow. I am your host, Joshua Barkley. And if you like the show, please subscribe to the podcast, tell others. And if you want to be a guest or a sponsor, feel free to contact us on our website, growyourcreditunion.com. And I will say, please go pick up Becky's book. We will drop the link to that book in the show notes. Thank you for listening, and we will see you next time. Take care. Bye-bye.